rate. But in the meantime, enjoy the tunes and we'll get started in 2 minutes. In the meantime, enjoy the tunes and we'll get started. All righty, ladies and gentlemen, we're going to go ahead and get the session underway. What is going on? Shout out to Dave. This guy's in outer space right now. Looking good, man. Looking good. Love to see it. We love to see it, ladies and gentlemen. Drop in the chat where you tuned in from this morning. As always, what's good? What's good? What's good? I'm over here in Montreal, Quebec at the moment. Looking good, feeling good. Got a haircut yesterday. I feel like I'm back on my A game. You know, sometimes a haircut will do that to you. You're just back on your A game, feeling like your best self when you get a haircut, you know. Maybe that's just me, but excited for today's session. We had NFP this morning, prior to today's live session. Bizarre day to have it, you know, because they decided to postpone it from last Friday, so they ended up posting it and releasing the unemployment claims and all that. You know, today, which is bizarre on a Wednesday. And then we got CPI on Friday, which we'll be doing a live trading session for only on YouTube. So there will be no Zoom. It'll be directly from YouTube for this very reason, because we're maxed out at capacity on Zoom. And, you know, we're waiting to, have like a corporate Zoom for all of Primeverse educators. So for now, we're just rocking with 100 participants. But shout out to those of you guys that are tuned in from all over. We've got, let's see in the chat where y'all are tuned in from. Drop in the chat if you haven't already. We got Scotland in the building, Germany, UK, Saskatchewan, Jamaica, Hungary, Vancouver, Dublin, Ireland, Norway, Belgium, Prince George, BC, Romania, Mauritius, Philippines in the building, Slovakia, New Brunswick, Sweden. Let's see in the YouTube chat if anybody's dropping where they're tuned in from. Slovakia in the house, Woodstock, Ontario. Amazing. Amazing, amazing, amazing. Glad there's YouTube live. Hey, I got you guys. Don't worry, man. I've had enough people complain about the Zooms maxing out of capacity. So I'm like, you know what? Let me take measures into my own hands until we've got a corporate wide Zoom, you know, and let's just stream this to YouTube. We got Windsor in the house, Montreal also in the house. Let's go. Dublin as well. Let's see. My teammates are crying right now. They don't have to cry. They can just join from here. Send them the YouTube live link. We got Czechia in the house, USA in the house. Amazing. Okay, cool. Well, yeah, man, let's go ahead and dive into the session, shall we? So, a couple things. I mentioned on Sunday how um, we've got the 2.0 or the V2 version of the indicator now, which is going to be released to everybody inside of Primeverse in due time. We're going to do like an email blast and send that out to everybody. But we made some upgrades and some updates to the inverse fair value gap indicator. And for those of you that haven't already seen the kind of breakdown of what the upgrades and updates are, you can watch the YouTube video that I'm going to drop in the chat box. And this kind of overviews everything. This is what to look forward to for the V2 version of the indicator, and we'll be using it together live on session today. We're going to take a look at gold. We're going to see if there's any opportunities that kind of make sense. But yeah, very excited about that. That's going to be fantastic. And then, GU, this was a sell that I called out inside of Primeverse, which, traded yesterday to TP1. We had a run on liquidity above these highs, but while still respecting this overall idea. And then we smashed TP2 with the NFP news. I would be reducing risk on this particular setup. For those of you guys that ended up taking GU sells, my main kind of target is these lows. We're going to see if we can take those out or not. But, TP2, which was a sweep of this, and the wick that was created this morning with NFP was enough for me to close the majority of my position. In fact, one of my accounts, I'm completely out of GU now, so I'm not even, necessarily looking to hold this to TP3. I think there's a good chance we could actually trade higher from here based on the liquidity sweep that we had this morning and so far, the reaction on GU. So if you ended up taking that trade, congrats. This is a profitable trade. That was the first trade I actually ever called out in PV Trade Insights. So we're 1 for 1 so far, and many more to come, of course. Not to expect 100% accuracy on all my trades, just for the record. The kid loses trades too. So don't expect to, have a 100% win rate. But the thing I wanted to mention with this trade is patience was so important to have because we consolidated in the area where we were looking for this reaction from for hours and hours and hours and hours. And many of you probably didn't have the patience to actually hold this trade through to TP. And I say that because, I got some messages from people that were like, damn, like, I didn't hold the trade. I closed it out because we were consolidating around entry for so long. You got to understand this sell that was given, and we shared this outlook on Sunday session before the actual idea came through on Monday. This is based on a 4-hour time frame point of interest. Okay. This was based off the 4-hour fair value gap that we had right here and the reaction from this zone. Normally, I wouldn't want to see consolidation in this area for that long. Usually, we want to see price trade into it and react pretty quickly from the zone. But because it's a higher time frame point of interest, it's a higher time frame setup, it's going to take longer to play out. It's not like the inverse fair value gap indicator where we're using it on the 1 minute, 3 minute, 5 minute time frames and done with a trade in less than an hour. In some cases, less than, 5 minutes if it's a really, fast moving market. So really, take that as a lesson for anybody that didn't hold this to TP or that for anybody that didn't take it in general. Okay, you can take the trade ideas that are coming out in the PV Trade Insights chat if they're not gold. Okay, I think there's a lot of people that just don't take anything but the gold trade ideas. There is money to be made on any of the ideas that are being sent out in Primeverse. Doesn't matter if it's crypto, doesn't matter if it's commodities, doesn't matter if it's Forex. Take the ideas. Okay. When PrimeSync comes out, we'll be doing the heavy lifting for you. PrimeSync's going to do the heavy lifting for you and take every single trade no matter what. But in the meantime, until then, take all the ideas. All right. Take all the ideas. There's money making opportunities across the board. So for those of you that ended up holding this to TP1 or TP2, congrats. I never mentioned to go break even. So, after TP1 was hit, we technically did trade back to entry prior to TP2, but I'd never updated to go break even because it wasn't logical to go break even yet. And so now that we've seen TP2 hit, I would trail stop loss to this high. There's not like an easy way for me to, you know, say to do that in the PV Trade Insights chat. So I'm telling you guys that are on the live session right now, I would definitely trail my stop above this high and have closed partials by now. We're floating around TP1. We wicked TP2 with NFP this morning. So definitely there have been opportunities to take partials. And I would have encouraged to take partials. If you haven't already, I would encourage you now to take some partials. But yeah, we'll see what happens, man. We'll see if this ends up trading to the full exit, which is kind of around 135, 800. We could reject from where we're currently trading and go lower. That would be great. And if not, this was a solid trade that moved, traded to TP2 prior to potential invalidation if we do get, invalidation on this particular setup. So that's the update on GU. Euro USD, this was an idea that we had shared on Sunday. Been able to delete it from the PV Trade Insights chat. There's no way for me to actually delete it. I made a bit of a mistake in thinking that, what I was doing was deleting it and there was going to be a message to everybody in the PV Trade Insights chat, but I was wrong and I actually just deleted it from the abyss. It's like gone. It's in the abyss now. So I can't even update the signals chat to delete this limit. So if you're on this call, this could still be a limit that plays out. However, I mentioned on Sunday, if we were to see price trade to, this point of interest and capture all this liquidity prior to the pullback, I wouldn't favor it as much because there wouldn't be as much of a reason for price to trade to those TPs because we would have already taken out, the liquidity in these areas and traded potentially back into this order block, which, by the way, we're rejecting from and was the same kind of area where I was able to justify the GU sells. So that's the update on Euro. I wouldn't personally keep this limit. I've deleted this limit myself personally. I have alerts set in these zones just in the event that this is still a reactive and logical area for potential longs, just observing price in that area when the time comes. But very, key point to be aware of there. And maybe at some point we'll, be able to manually send a message in the PV Trade Insights chat to delete the Euro USD buy limit. It's still an area of interest for sure. For sure. But it's not something that I would keep a limit on anymore. I think it's more likely that if we trade down to this area, we would continue lower, having already captured all this liquidity. Okay. The anticipation was a retracement and then take the liquidity, not capture all the liquidity and then get our entry. It doesn't really make sense. So that's the update on Euro USD from Sunday. Jumping over to gold. Okay. Goldilocks. Couple things that I want to take a look at with you guys. So daily time frame perspective, this is what we're working with in terms of price action. And although I would, love to see 5,600 soon, it could take a little bit more, time for us to develop towards new all-time highs and price discovery again. Price discovery, for those of you that are unaware, is just price trading at an all-time high, right? We're discovering prices that we've never traded at before. That's what price discovery means. And so for me, with gold, I think it could take a little bit more time to get up there. This remains a major point of interest for me, down around 47.50. I don't know if we're going to get a retracement that low. We might only get 4,800. There's a little fair value gap in here on the hourly. But I would definitely be down to, take potential longs from this area of interest should we trade down into it. And these previous ones are old points of interest that price reacted from. So we'll kind of just make those a little bit less visible just because they've already been traded through and into and off of. But this is the trading range that we're working with from last Friday to current price. Normally, the high or the low of the week, depending on whether the week's going to be bullish or bearish, is established on a Wednesday or Thursday. Those are the days in the week that typically we will see the highs or lows of the week established. So to me, it's no coincidence that going into London session today, we expanded, capturing numerous areas of liquidity, and so far have set this high and are now selling off. This could potentially be the high for the week. Maybe not. We could trade higher tomorrow. We'll see. But I say that because now that we've captured a lot of buy side liquidity, a lot of seller stop losses just got swept with this movement during London session. I'd be curious to see if we can now go and attack the other side of liquidity. And there's a lot of sell side liquidity beneath these lows where buyers have their stop losses. And, these are just some of the areas where there's liquidity. All right, these little zones I'm marking out on screen. Each swing low, basically on the hourly time frame, these are all areas of easy liquidity that price could trade back to and potentially sweep. And all of these are above the 50%. Normally, if we're in a bullish environment, our goal should be to buy at a discount, which is below the 50%. Okay. This is the hourly time frame perspective. If we were to take a fib from like this low to this high, it's like we're kind of at the 50% right now on a smaller time frame, you know. But basing this off the hourly time frame perspective, I'm not really interested in taking buys until we're back to the 50% and ideally lower, and we have points of interest and reason to trade lower to then look for buys below the 50%. Okay, and we have tons of liquidity to capture on the way down. So really, my thought process going into Thursday, Friday this week is this on gold. Maybe we see that, maybe we don't. Okay, but yeah, we had a false spike or a spike lower with NFP, and we did capture a lot of liquidity. Okay, we did capture quite a bit of liquidity. Asian session lows, mid-afternoon lows from yesterday's New York session, but there's a lot more, especially these two lows from Monday. I'd really be keen on seeing these taken out this week. So maybe we can look for shorts on gold, right? Maybe we could look for shorts. In terms of where I'd be looking for shorts on gold, there's not really like a key point of interest. And until we've seen, price trade and take out and get candle closures beneath this wick from NFP, it's kind of difficult to justify sells because we're still technically in a bullish environment where the market's creating higher highs and higher lows. So we're kind of just playing off the thought process of, hey, there's probably some exhaustion here because we're condensing. We're not seeing massive impulsive movement like we did back here. We're starting to see some exhaustion in the market. And so at some point, I'd like to see this roll over and give a retracement and then look for buys again below the 50% ideally. So yeah, man, we'll see if we can get some potential shorts. Usually when I'm on these Wednesday sessions, I'm looking for opportunities around 10:30. And so that's, about 9 minutes from now. Something I would be keen on is if we can get a sweep of these highs potentially, I would be open to taking an inversion sell. So that's something that I'll be taking, into consideration if and as to when we trade back above 50.80. We don't need to see that. We could see price, just continue flying, right? We don't need to see an inversion above this area. But just considering the price action from where we were at 7 a.m. to the low that we created at 8 a.m., this is the trading range we're in. And if I'm wanting to sell, I want to sell above the 50%, which would be above this area of liquidity. Okay, if you're to take a fib to this, because again, the market is fractal. You have trading ranges inside of trading ranges. You have waves within waves. So we're kind of at the 50% right now. If we're taking just candle bodies, we're also more or less kind of at the 50% or a little bit below the 50%. But I like to take wicks usually for trading ranges. And so I wouldn't be opposed to looking for shorts should we get this and then some sort of inversion on the, 1 minute, 3 minute, 5 minute following the indicator. So I've got an alert set on that. There's not really anything else that I'm looking for on gold. I wouldn't be looking for buys personally at current price. It might have made sense to take buys from down in here at around 9:30. And there was probably an inversion opportunity. Yep, right here. Okay. But yeah, I like sells a little bit more. If we're taking a look at silver as well, silver is also showing some signs of potential weakness, trading into and, so far rejecting from this order block back here, these last few consecutive up close candles. So that's the bias and the perspective that I have on gold. Until we get a run on these highs, I'm not really looking to take any sort of a setup. Maybe we get that on the session, maybe we don't. But this is either way a point of interest that you could look for potential sells out of. And I'll even mark this up and I'll drop this in the chat. Watch for IFUGs in here. And what I want to do today, because we're just going to be kind of chilling and waiting until we see price potentially trade into this area. is I want to give you guys a breakdown and a clear training as to how I use the inverse fair value gap indicator because I still think there's some lack of understanding there from some of the conversations that I've been having with a lot of you, which is totally fine. It's on me. I think I could do a much better job explaining exactly how, when, why I'm looking for setups the way that I am with the indicator. So I want to spend the rest of this morning until we get a notification, at least for what Gold's doing. Um, giving you guys that breakdown. And I think that would be of value. And if you guys have anything that you want me to take a look at and analyze, by the way, if you have a chart that you want to get some feedback on, or if you have, a certain currency pair you want me to take a peek at, if there's time on the session and we don't end up taking a trade live, I'm happy to do that and go over those with you guys as well. Okay, so until we get, a run on this high, I'm not really looking for a setup. So yeah, we're kind of just going to be waiting for that. I'd maybe be curious to know if we end up taking this low as well. So I'm going to set an alert at 50.35 just to see if we can get follow through. And then, I mean, who knows? Maybe, I don't know if we would get this on today's session, but maybe after going into the later portion of New York session, I'd maybe be looking for a short-term inverse fair value gap play after taking these lows as well. But again, ultimately, this is the outlook, right? I want to see this. So anyways, let's dive into the training. And let me check out the chat box. I think you guys have been pretty locked in. Let's see. 12 a.m. in Japan, locked in from Japan. Let's go. And we love to see it. How's the lot size for GBP USD? It's pretty simple, pretty standard. It's not as heavy as, gold is a heavy moving pair to trade, right? One thing you can do though from Primeverse is we have a lot size calculator, so you can calculate your lot size. So if you have if there's a trade on GBP USD and we had, I think it was like a 45 pip stop, maybe you're trading with $1,000, you want to risk 2% per trade, 3% per trade, whatever. You can obviously do more than that too. Just make sure you're risking the same amount per trade and ideally not more than you're willing to lose. Okay. I don't think anything beyond 3% is necessary. But I can go calculate lot size and it's going to tell me the exact lot size that I want to use. So this is I'm going to drop this in the chat for you guys. This is the site that we have inside of Primeverse to use to calculate risk. Okay, so something to consider there. It's very simple to use. You can also do this directly from MetaTrader 5. If you're on the chart window and you click trade from the chart window, you can actually see GBP USD. The little thing will pop up at the bottom. You can select your lot size. You can choose to put your stop loss, and you can actually drag it to where you want it on the actual chart. And it'll tell you in the window below how much you're risking, depending on what your lot size is and where you're placing your stop loss. So pretty handy. You can do it directly from the MetaTrader 5, app, which is pretty neat. Okay. So anyways, let's talk about the inverse fair value gap indicator and really the proper way of using it. And I want to, I'll showcase some of the upgrades and updates that we've done with it as well. So I'm going to pull this up on a clean chart. And yesterday, this was a point of interest. We're going to go into the replay mode here. This is a point of interest that I had on golds. All right. So this is kind of what we were seeing. Beautiful. Actually, you know what? I'll show two setups from yesterday. There was a beautiful setup during New York session. Let me see if I can pull this up. Let's go this data feed here. Perfect. So in the replay mode, first things first, okay, how does the actual inverse fair value gap indicator work? All right. Because many of you could potentially be seeing this for the very first time. All right. Very simply put, any sort of fair value gap that is created in the market, for example, this right here, okay, is a fair value gap. All right. There's a very simple, I'm trying to think if I have this on my computer. I think it's on my phone. Let me airdrop something to myself real quick. It's a really, really good resource. And hopefully Hopefully I have this. Give me 2 seconds, you guys. Dun, dun, dun. So this right here, I need to airdrop to myself. Airdrop. All right. Show and finder. Here we go. Sweet. So let me pull this up. Okay. So this right here, what is a fair value gap? Let's go over this really quickly. All right. And we're not gonna spend too much time on this particular PDF document, but this is a great resource. Shout out to the Primeverse team for making this. So what is a fair value gap? Okay, a fair value gap is essentially a price imbalance and market inefficiency, right? So this, doc kind of goes over everything you need to know. So what we'll discuss, we're not going to really spend too much time. I literally just want to show you guys what it looks like visually. Okay, by definition, a fair value gap is a price imbalance created when price moves too fast, leaving unfilled orders or areas where slippage took place, essentially. Okay, the market seeks fair value, giving opportunity for buying and selling at every single price level in the market. So if you take a look at the NFP news release that happened this morning, there were certainly trades that didn't get filled at areas where there were pending orders resting because of how fast the market moved at 8:30. And we see this all the time with news. Okay. If you've ever experienced slippage with your stop loss, with your TP, with your entry, even, that is essentially what a fair value gap is. It's when you have price moving so quickly through an area that it's not properly filling you at the price that it should be, given that you have a pending order set at a certain price. So at a glance, what it looks like, it's a three candlestick pattern. Okay, you have candle number one, candle number two, which is the one that creates the fair value gap, and then candle number three. This zone where you have no overlapping of wicks is the fair value gap zone. Okay. So candle number one, let's say we had a wick trading to here. Candle number two, we had a wick trading to here. This would be my fair value gap because there's no overlapping of wicks. There's no, zone where buying and selling was offered in both areas in both directions in terms of price. Now I could drop to a smaller time frame and maybe there is, you can see there was trading offered on both ends, and that wouldn't be as relevant of a fair value gap as a fair value gap that you can see on numerous time frames. That's like a little sidebar, but one maybe to write down and take note of is that if you can identify a fair value gap on more than one time frame, that is going to hold more weight than just a fair value gap you can see on, I don't know, the 15-minute time frame, but no others. Okay. A true fair value gap is one that you'll be able to see on multiple time frames. All right. So what is the candle formation? Again, number one, strong displacement candle in the middle. That is, candle number two, right? Where we have a strong push in a bullish or bearish direction. And the gap in between is from candle one, the high, and candle low of number three, the low of candle number three, I should say. So again, you have your high from candle number one, the low of candle number three. This is the void where there's imbalance in the market. Same thing from the high in candle number one and the low, or sorry, other way around. Low candle number one and high of candle number three in a bearish environment. This is that void where buying wasn't offered efficiently. So that is basically put what a fair value gap is. And jumping back to the chart, an inversion is when you have, and you'll see that this indicator highlights fair value gaps. So here's a fair value gap. We'll just draw it out, for emphasis. An inversion is when price actually trades and delivers through. Okay, so far we're trading and respecting this fair value gap. An inversion is when we actually see candle closure through a fair value gap. Okay, this is what we call an inverse fair value gap. And so the way that this indicator works is every single time, the way that it's programmed, the way that this is coded, this indicator is coded to show and give entry parameters every single time an inverse fair value gap is created. So that is important to know because sometimes, we might look at the indicator and think, oh, on the 15-minute time frame, it's giving a buy signal. On the 5-minute time frame, it's also giving a buy signal. But if I go on the hourly time frame, it's giving me a sell signal. What is going on? There's a discrepancy with the indicator. It's broken. It's not working. Wrong. It's working. It's doing exactly what it's supposed to do. There are fair value gaps that are visible on certain time frames and that differ from any other time frame. So the indicator is programmed to whatever time frame you're showing and you have on your chart. It's going to show you the most recent fair value gap inversion, and it's going to give you entry parameters accordingly. So just to be very clear, it is programmed to do exactly that. So any single fair value gap that we have inversion with, which is, hey, here's an area where there was an imbalance, there was a fair value gap. There's two ways really to trade fair value gaps. One is you can look for a price to trade back to it and continue in the direction that the fair value gap was created. Or number two, we see price trade back to it, maybe slow down a little bit, but ultimately get candle closure through it, like what we get right here. This is candle closure through the top of the fair value gap. And we're actually looking for this to be an early sign of reversal. Hence why the fair value gap indicator, the inverse fair value gap indicator, it is a reversal indicator, giving you parameters in the opposite direction of the actual fair value gap and where it was printed. This is a bearish fair value gap. When you get candle closure through a fair value gap and an inversion is created, that is like the earliest sign of reversal, and you can look to take a trade in the other direction. Okay, so that's just to be very, very clear. You will see different time frames giving you different setups, but the indicator is working the way that it's supposed to. It's showing you on that time frame where the most recent fair value gap was, and more importantly, where the nearest and most recent inverse fair value gap took place. And so the entry parameters are going to be given accordingly. So that's how the indicator works. Okay, very simple. It's not a fancy indicator. This is not looking at anything other than where was an inversion, where did it take place, and then it's giving you entry and exit parameters accordingly. So if we take a look at, an example of a setup that I was looking for yesterday that played out absolutely beautifully. I mean, this was a textbook setup. And I'm going to hide the indicator for a second here because now we're going to move into how I personally use the indicator and how it's meant to be used. Okay, because it's not meant to be just taken for face value and it's like every single setup you're just taking. No, that's not the best way to use the indicator. You could do that and have great success with that. All right, if you're using the indicator in the way it's supposed to be used, though, you're using it in confluence with other things that you are identifying yourself personally before even toggling on the indicator to be visible. Okay, in the indicator section in the top left corner of your chart, you have the ability to toggle it to be visible or invisible. Your number one first thing to do, write this down, right? If you're taking notes, this is definitely worthy to write down these 3 steps. Okay, step number 1 is identify trend. All right, identify trend. Are we in a bullish environment? Yes. Great. More recently, we've been in a consolidation. Okay. Number 2, where is the money? This is in regards to liquidity. Where are there areas of liquidity? Acknowledge and identify those areas of liquidity. So if I'm taking a look at this chart, this is Tuesday morning, it's 8:30 a.m. Okay, I'm looking for an opportunity. I'm hungry. I'm on the charts and I'm hungry. I'm ready to feed my family with today's trading. Okay. I got to ask myself, where's the money? All right. I got to ask myself, where's the money? And I need to identify it on my chart. So if I'm taking a look at this, what is liquidity? By definition, it's swing highs and swing lows. We'll save that for another lesson because we don't really have time to break down what liquidity is. It's essentially any area that you would mark out as an area of quote unquote support or any area you would mark out as quote unquote resistance. There is liquidity above resistance and there's liquidity below support. Okay. So at a glance, right? A bunch of people are probably selling from this area of quote unquote resistance and buying from this area of quote unquote support. All right. So what I'll do is I'll identify these areas of liquidity. I'll draw a line, and I like to put a little dollar sign, on my preset lines. This is kind of how they look. Okay. For those of you guys that don't know, you can take a tool. This is a trend line tool. Go to the text. You can add a, dollar sign or, whatever you want. I'll put an X for liquidity that's already been captured, and you can save it as a template. So I have a bunch of templates saved. I can go save as liquidity, buy side, right? Because the dollar sign is on the top. That's for buy side liquidity. Sellers, have stop losses above the highs. That's buy side liquidity. And you can save these templates, very simply, very easily. A lot of people don't even know that. It's a very, basic thing, but it's, fundamentally important to know. So maybe some of you didn't know that, and now you know. But that's the second thing I'm doing. Number one, I'm identifying trend. I know that we're in a bullish environment. Number two, I'm asking, where is the money? Number three, where are the POIs? Okay, what is a POI, Donnie? Well, a POI is a point of interest. These are things that I teach, in some of my bootcamp content that you guys will have access to when the Smart Money 2.0 bootcamp comes out. Okay. A point of interest is an order block. A point of interest is a fair value gap on a higher time frame. All right. A point of interest is something that you can identify and acknowledge as an area where price is likely to react from. Okay. So when we take a look at the chart that's on screen, this is gold yesterday morning. I know we're in a bullish environment. I've identified a couple areas of liquidity here. Okay, technically this high too. You can look at this high as well. There's liquidity to the buy side above these highs. There's a lot to the downside. I take a look at this and I think to myself, we have a lot of consolidation in this area, and there's tons of liquidity that's building up beneath these lows. And normally, what are we taught as a basic rule of thumb as traders? You want to buy low and sell high. Well, I don't really want to buy at a premium. This is like the highest we've been on gold in, since Friday, right? So sells would actually be favorable in this instance just for a retracement, understanding that the higher time frame trend is bullish. What point of interest do we have? On a different data feed, this wick isn't here. I'll see if I can find one and show you guys. See if I can revive my light. Boom. All right. On certain data feeds, this wick isn't here. I believe on PE Prime's data feed, this wick was not here. This is a 6 p.m. candle that, wicked to the upside. Perhaps I'm mistaken. We're not going to spend time trying to look for a data feed that, doesn't have this wick. But nonetheless, there's a fair value gap here that was wicked through. And, nonetheless, we could have potentially marked up as a point of interest. Usually you don't want to have a fair value gap that's already been traded through as a point of interest, only ones that haven't been traded through. But, on PE Prime's data feed, I'm pretty sure this wasn't filled. So this was an area that I was looking at, of interest. Okay. Next, once I've identified this is on the higher time frame. This is on the 15-minute time frame. You can look at this on the one hour time frame. The only time I'm actually going to toggle on the indicator is from a smaller time frame, number one. Okay, these are the first three steps that we're doing. Next, and these we're just going to do bullet points. I'm only using the indicator on smaller time frames. You can use it on higher time frames. Nothing wrong with that. Nothing wrong with that at all. You could find some great consistency trading this, just on the 15-minute time frame, on the 1 hour time frame, no problem. But for me personally, and the way that the indicator is meant to be used is from smaller time frames. So that's like the 1 minute, 3 minute, 5 minute, 1 minute to 5 minute time frames. I'll look for entries when liquidity is captured and when trading inside a higher time frame POI. All right. So let's break this down. Okay. So we have this is a 15-minute fair value gap. We have areas of liquidity here. Okay, where's the money? That's the question we're asking ourselves for where's the money? Where's the liquidity? So I'm only using the indicator on smaller time frames, ideally the 1 minute, 3 minute, 5 minute. That's kind of the range that I'm looking to use the indicator on. And I'll only look for entries when liquidity is captured and slash or when trading inside a higher time frame point of interest. So this is a higher time frame for value gap on the 15 minute. Okay. If we were to trade up into this, we're capturing liquidity. And I would look for an inversion in this area to take sells to then target the other side of liquidity. Very simple. I mean, this is the way I trade all the time. We did a training on this on Friday, and it was like a how I trade news training. But I mentioned that it's kind of how I just trade even without news. It's the same thing. We're breaking down the same thing right now, but with the indicator. So now as we play out price, we're going to drop to the 5 minute. Okay, what I would do in this scenario is the same thing as what we've just done on gold. All I would do is set an alert at these highs, and I would set an alert on these lows. That's it. I'm not going to stare at the chart. There's no point. No point in staring at a chart because you're going to force an opportunity or force a trade that isn't actually there. And remember, the inverse fair value gap indicator is always going to give you entries based off the most recent inversion. But to find the highest quality setups, I'm following these steps. I'm identifying trend. I'm identifying where the money is. I'm identifying where the points of interest are. And then I'm only using the indicator on smaller time frames, 1 minute, 3 minute, 5 minute. And I'll look for entries only if and when we've seen liquidity captured on a higher time frame or we're trading inside a higher time frame point of interest. Okay. So I'm not staring at the chart leading up to these highs getting taken. I'm only coming to the chart when I get that notification that, hey, price traded above these highs, which you'll see as we play out price here on the 5 minute. We're chilling, we're chilling, we're chilling. Imagine I was staring at this thing. I would have been bored for 45 minutes until we finally take these highs out. Look at that girthy candle. What a word, girth. Look at the girth on this candle right here. Okay. 5 minute candle trades 150 pips into this fair value gap, captures both these highs. Okay. Remember, I'm only using the indicator on smaller time frames, 1 minute, 3 minute, 5 minute, when I've seen a liquidity capture and or because sometimes they don't happen together. In this case, it's happening at the same time. And or we're seeing price trade into a point of interest, either liquidity capture or point of interest is being traded into. In this case, we have both. Okay. Old fair value gap. Again, this wick is kind of irrelevant because it wasn't here on every single data feed. It wasn't there on PU Prime to my recollection. Now I'm dropping at the 1 minute because the 1 minute will always give you an inversion first. If you want to write this down, 1 minute inverse fair value gap entries will always come first. Okay. Well, not always, like 95% of the time. You will see a 1 minute inverse fair value gap happen first, then 3 minute inverse fair value gaps, followed by 5 minute. Okay. And this is always going to be dependent on how price is printing, So here we are, 1 minute time frame. We have relatively equal lows on the 1 minute, just throwing that out there. Okay, nothing, not that we're looking to target 1 minute lows, but I like to look for reasons for price to trade to certain areas. And we're trading inside this higher time frame point of interest. Now I'm toggling on the indicator and I will literally watch price develop. I will watch price print until we get an entry given with the indicator outside or inside of this point of interest. Okay. So taking a look at this as we're printing, okay, there's an entry given or almost given. All right, almost given. We didn't actually get candle closure through this inversion yet until right here. So 1 minute time frame, will always give you an entry first. So you can see these are the entry parameters that are being given. I'm going to make this a little bit easier to see. Let's do blue. Is blue easier to see? Yeah, a little bit. So here we have a 1 minute inversion inside the point of interest after a liquidity capture. Okay, you can see it's labeling the inverse fair value gap. There's a fair value gap created here. Price wasn't overlapping wicks. We traded through it a couple times. We didn't actually get candle closure through it until right here. That's where the entry parameter was given. It's then going to give you two take profits based on the risk to reward ratio that you've set in settings. So take profit settings by default, you're going to have two take profits toggled on. You can choose to toggle on a third one if you'd like. And the risk to reward ratios are going to be set by default as 1, 2, and 3. This is something you can adjust in the settings. With V2, you can adjust this in the settings. If you want to change this, you're absolutely welcome to. But with the inverse fair value gap indicator, you're not looking for ridiculously high risk to reward ratios like 1 to 3, 1 to 5 for first, two take profits. It's different than, other strategies and styles. It's a higher probability strategy with a higher win rate when you have a lower, risk to reward. Is really good win rate actually with a 1-to-1 risk to reward. 1 to 2 risk to reward also fairly solid win rate. So this is the first inversion that's given on the 1 minute. 3 minute, if we take a look at price, there's not even anywhere close to an inversion back here. The most recent one was a buy setup from back here. 5 minute, same thing. Okay. Again, you will always see the 1 minute give you the inversion first. So here we have that inversion. All right. If we're taking this trade, which this is a totally valid and relevant and ideal setup to take. I know it might be a little bit hard to, see something like this, like a very bullish move like that, and then just get an inversion and take a sell from there. It can be a little bit intimidating. But again, what is the context? The context is we're trading inside of a 15-minute time frame fair value gap after having captured two relevant higher time frame highs. So the second that we're seeing an inversion, this is your evidence of, hey, this is probably a good time to take the sell instead of just taking it, blindly out of the higher time frame fair value gap or, taking it from the higher time frame. You're going to get a better entry, a better risk reward, a better stop loss size, taking a sell using the inverse fair value gap indicator on the smaller time frame when price is trading in the higher time frame point of interest. I really hope this is resonating and making sense. I really hope so. And I'll get some feedback from you guys in the chat in a second. As we play out price, we consolidate here for a little while. The first entry is taken out. I'm not losing confidence in the setup. I'm not feeling any type of way about it. There are instances where the indicator will have 1 or 2 invalidations prior to the actual move. Stay with me. Okay, so first setup, we get invalidated. You can see that there's an X here. That means that the SL was traded through. This is an invalid setup. All right. I'm going to continue to watch price develop. We have, this is a weird one, another inversion that's given right here. Okay. And if we look on the 3-minute time frame, this is, that was like a last up candle prior to a pretty aggressive move lower. 5-minute, you're going to see something fairly similar here. 1-minute time frame, this is like a very strange data feed. Where we see a little bit of a wonky inverse fair value gap here. You can hardly even see it. On a different data feed, it's a little bit clearer. But nonetheless, it's giving you another indication for shorts. Now, you might look at this and be like, well, Donnie, I just took an L on this setup. Why would I try and, take the same setup here? And, what's the likelihood of it being any of a different scenario? And that's, understandable why you might have that mindset. The thing with the inverse fair value gap indicator is you might have 1 or 2 setups that are invalid prior to that absolute banger of a setup that ends up trading and playing out directly to TP almost immediately. Okay. Again, this is inside a higher time frame point of interest, so there's reason for us to be taking these setups. First one was invalidated, so what? On to the next one. Okay. When you learn to move from one setup that was an L to the next setup and completely disregard and not let the previous setup influence your decision-making process, that's when you'll really find consistency and profitability. And this is an instance where this is put on display because the first setup was invalidated. Second setup is given here when we get another inversion, not like the best, most sexy example of an inversion. Maybe the 2 minutes is a little bit different. It's not any different. Okay. But nonetheless, price sweeps this high. We get inversion. There are your entry parameters. And as we play this out, you'll see that we smack both TPs directly after getting this indication. And not only that, we end up taking those relatively equal lows on the 1 minute. And this thing absolutely melts all the way down to the lows. Okay. We end up getting a bit of a pullback, and then boom, we end up smashing and taking out all 4 of these relatively equal lows. Okay. 5-minute time frame, here is your inversion entry. So if you're like, okay, these 1 minutes are not always the most consistent. We had one back here. We had another one that got invalidated, whatever. I want to wait for the 3-minute or 5-minute. You can totally do that. And if we take a look back here, you'll notice that there was an inversion setup given on the 3-minute time frame right here. Okay, so when this 3-minute time frame got inverted, a bit of a bigger stop loss, but TP1, TP2 at 1-to-1 and 1-to-2 risk to reward respectively. Smashes TP1 immediately. A little bit of a pullback. You'll notice that, again, the indicator is programmed by default to always show you entry parameters of the most recent setup. But under display limits, if I want to go back and see my previous setup, I can increase this to show the last 2 and to hide the most recent one. So I can focus on the ones that I actually want to see on my chart. This is a huge upgrade from the last, V1 of the indicator. And so this is a setup that we had from that particular 3-minute time frame inversion. And again, what are we targeting? Obviously, the indicator by default is giving 1-to-1 and 1-to-2 risk to rewards for TP1 and TP2 respectively. But for me, I'm always looking for liquidity to capture, and we take out every single one of these lows after sweeping these highs, and we also sweep this high as well prior to actually getting that move. So really, really solid setup. We got it on the 1 minute first, we got it on the 3-minute second, and we got it on the 5-minute thirdly. Okay, which makes sense. Usually it'll be in that order for the setup. So yeah, that is an example of how I would use the indicator. Again, I'm looking at and I'm considering these points that we've written on screen. I'm not just taking the setup blindly based off the parameters that are given, because guess what? The indicator is going to give us parameters every single time the market creates an inversion. The 3 questions I'm asking myself, or the 3 things I'm looking at and considering, is number 1, I'm identifying the trend. Number 2, where's the money? Number 3, where's the point of interest? This is on the higher time frame perspective. Okay. Next, I'm using the indicator on the 1 minute, 3 minute, 5 minute, the smaller time frames. And I'll only actually look at the indicator once we've seen some form of a liquidity capture, or we're trading inside of a higher time frame point of interest. In this instance, we had both. We had liquidity capture and we're trading inside this point of interest. And we ended up sweeping this high as well when the actual, inversion ended up being an absolute banger. And ideally, I want to look to see, do I have liquidity I can target? Is there liquidity? Is there an area where I can see price trading to that will be the magnet that's drawing the market to a certain area, a certain level? And then again, a couple points to consider. When you're on the smaller time frames, you can start by looking at the 1 minute and then look for follow-up inverse fair value gap entries on the 3-minute and 5-minute. You will find more consistency. Huge point here, write this down. You will find more consistently profitable setups on the 3-minute and 5-minute time frame than you ever will on the 1 minute. But, huge but here, okay? Thick but here, okay? The 1 minute time frame will give you the earliest entries and sometimes the better setups. There's just a little bit less consistency, a little bit less accuracy, and this is a prime example of that. Okay, remember, before we ended up taking that banger of a sell, in this particular example, we had a losing trade. The first attempt was a loss. The second attempt, though, absolute banger. And this second attempt came well in advance and well before anything presented itself on the 3 minute and anything presented itself on the 5 minute. Okay, our entry on the 1 minute time frame was up here. Our entry on the 3 minute and 5 minute time frame was down here, almost 200 pips lower. So all that to say, the indicator is really, really solid for timing entries. It's really solid for just taking it for face value. In some cases, when you have, entry and SL and TP parameters, you can take it just for face value with those parameters. But my preference is actually to take one position just to focus on these parameters and a second position, especially in this kind of a scenario where it's higher time frame point of interest, smaller time frame entry, to then target the higher time frame lows. So I'll swing this thing for, in some cases, well beyond just a 1 to 2 risk to reward. Okay. So that is the thorough kind of breakdown of how to use the indicator. What I want you guys to do in the chat, first of all, if you're on the same page, if you're somewhat following or understanding what I just went over, I want you to drop a 1 in the chat. Okay. Just so I can gauge, who's been with me, who's been following everything I've been going over. Because this is, obviously it's a lot. Like we just went over that over like, 30, 35 minutes. So I want to make sure everybody's more or less on the same page. And let me check out the YouTube chat as well. Make sure you guys are still alive. All right. Where can we get this PDF? It's something that just the educators have access to use for trainings. So it's not actually a resource that's like public to anybody, but I guess it could be, maybe we can make it available in the Primers community. But okay, cool. So we're getting lots of ones. Now, questions. What questions do you guys have in regards to the training? What can I help to clarify? What can I help to, make more sense of with you guys? All right. Because obviously, we're aiming to use the indicator with confluences. We're not just taking it for face value. We're not just taking every single setup we see, although you could, and you probably would be profitable, to be honest, if you did. But we're wanting to increase the win rate. We're wanting to increase the level of understanding, the level of accuracy we have on our setups, and that's why we're using it in Confluence with higher timeframes. You can upload this to your YouTube channel. Yeah, the full recording of the live session will be on my YouTube. And then I'll probably take this training portion over the past 35 minutes and I'll edit it and I'll condense it to be more straight to the point. Do you only hold until TP2? No, I'll partial at TP1 and in some cases go break even after TP1. Do you go into the trade on the 3 minute or 5 minute between the SL and entry price? Yes. Yeah, you can, in theory, like on the 3 minute, as soon as an inversion prints, like we're about to get one like right here, right when this candle closes above this fair value gap, that would be when you take your entry. It's right at candle open. How to access the scanner? You can go into Primeverse and look for the inverse fair value gap beta section, and then just fill out a form in here. And then within 48 hours, you'll have access to the V1 version, and then you'll automatically be added to V2 once that goes live for everybody. Can you show us how to find POIs? Yeah. Yeah, I'll come back to that. What is your risk to reward split in TP1, TP2/swing? So I'll split my entry. So if I have, let's say, 1R, let that represent like $30. Okay. I'll split that in 3. So I have 1/3 for TP1, 1/3 for TP2, 1/3 for the higher time frame swing. The updated version of the inverse fair value gap indicator hasn't been launched publicly yet. So I'm just showcasing it on stream, but it hasn't actually been launched publicly. It'll be launched to everybody in Primeverse soon. But that's how I'll split my risk. Okay, so 1R, let's say I'm risking $30 a trade. I'd have $10 and you could take three different entries, or you can just partial at TP1, partial at TP2. I think it's better to twin trade and actually take three different entries. That way you don't have to be on the charts to, partially take profits. I think it's important actually to twin trade. Twin trading is when you have, you know, a setup and then you take the trade and you split your risk in half or in three, and then you set different take profits accordingly. That way it's completely emotionless and it's more mechanical. Because you might have, for instance, Blanky, you're falling off my lap, man. You about to go down. I've got a dog on my lap. You guys probably didn't know that. I've had a dog on my lap this whole session. Um, but I'll split my risk into multiple positions, TP1, TP2, and then a swing. That way it's, three separate positions, three separate take profits. I don't have to go in impartial. It's just automatically going to do the heavy lifting for me. For higher time frames, should we mark liquidities in 15-minute or 1 hour? I think on an average day, like you can just do it on the hourly or the 15-minute time frame. I mean, on the hourly time frame, like you'll be able to identify areas of liquidity, and a lot of them are still going to be relevant on the 15-minute. And you might see a little bit more on the 15-minute time frame in terms of areas of liquidity than you would on the hourly because it's more zoomed in, right? Like if we were to take a look at the example that we broke down from Tuesday back here, and we take a look at this on the hourly time frame, right? We'll hide the indicator for a second. Hourly time frame perspective, this is, what we're working with. So I can identify, okay, cool. Here's, Tuesday, we got relatively equal lows here. And I've got, a swing high right here on the hourly, right? The 15-minute, I get way more clarity. I see both these lows, plus I see both these lows. So I'm seeing even more of a reason for us to trade to take those lows out. And I'm also, able to see that, hey, we have three relatively equal highs like right here before this one as well. So the 15-minute time frame is actually the time frame I would say to use more than the hourly for identifying liquidity during any session. So that's like the London session or the New York session. You can do the same thing. So this was obviously a New York session example, but even during London session, you'll notice great opportunities for inverse fair value gap plays when areas of liquidity are captured, so on and so forth. Is it better to take trades after taking liquidity from Asian and London session? Well, any session you can look for a liquidity grab of the prior session. So if we're looking at Asian session this evening, I could get a run on liquidity above New York session highs or New York session lows. The other example that I was going to show you guys was the shorts that I took from here last night. And this was during the Asian session. So Asian session prior to this, and I'll answer the question of how to identify points of interest right now as well. Okay, what is an order block, right? An order block is the last two up candles or the last up candle prior to a significant down move. And ideally, you're looking to see liquidity captured as a result of that order block. All right, that's going to be a higher probability order block to get a reaction from. Okay, so here we have perfect example. This was that same candle that we took sells from based on an inversion on the smaller time frame that captured all these lows from the New York session of Tuesday. So here we have liquidity capture, last two candles prior to a down move, right? And we have prior to the market reopening at 6 p.m., because the gold market closes from 5 to 6 p.m. We have these two relatively equal highs. Okay. And this is where the market reopens. Market reopens, we immediately go and we take out New York session highs. And we start to trade inside this point of interest. And check this out. 1 minute time frame. After having taken out these highs, we do end up seeing an inversion opportunity as soon as the inversion happens right here. Right? It's very, you can't really see it that well on this data feed, but if we look on like Oanda, oh, it's pretty fine-tuned on the Oanda data feed as well. One of the data feeds it's like a little bit better. I'm trying to remember which one it is. Yeah, this one right here, FXCM. Okay, so the entry parameters were given here after we take both these highs and we're trading inside that order block. Right. So instead of me just taking it, taking a trade off the higher time frame point of interest, I'm looking at the smaller time frames to justify an entry. 1 minute gives you that inversion right here. And as we play out price, we chop around for a little bit. TP1 is hit. Next setup is identified. We were going to hide that one to focus on the previous. And you'll see that I got to do this a couple times. You'll see that this does work with me here, indicator. Come on. We do end up hitting TP2 on that particular setup. So I took shorts from this area, smart time frame play, 1 to 2 risk to reward. And I was actually wanting to target these lows, which I don't think we ended up taking out. So I, ended up being a part of this until TP2. But if we continue to play this out, we chopped around a little bit, ended up trading back to entry and not trading to this low at 50.20. Reason I wanted to see 50.20 low taken was that was the low of the candle just before 6 p.m. So just before the Asian session opened. But yeah, so you can, all that to say, that's kind of how you look at and identify points of interest, number one. And number two, you can look at this indicator and identify opportunities and setups during any new session with you looking to see liquidity captured from the previous session, highs or lows. Happy to be part of this with you after a long gap of 5 years from your Canada team. Yeah, Ajit, great to have you back, man. It's great to have you back. Do we always take fair value gaps as points of interest, or do we look at order blocks or breaker blocks? All three. Fair value gaps, order blocks, breaker blocks, these are all points of interest. If you take a look at the setup, and this is a chart that I had from, let me see, from gold yesterday. This was the perspective, right? Breaker block, fair value gap, and this is all, in line with that order block as well, right? So this is like a lot of confluence for those shorts. I wanted to see these lows taken. We didn't get them, but the 1 minute inversion in here was enough for me to take a 1 to 2. Are order blocks similar to mitigation blocks? They are different things. I have a dictionary that breaks down the differences between each. If you DM me the word dictionary on Instagram, there's an automation set up to send you it. This is my Instagram right here. So if you want the dictionary, DM me dictionary and the automation will send it over. But yeah, there's a difference between those. I think mitigation blocks in here. Is mitigation block in here? Maybe not. Continuation block, basic order blocks, breaker blocks. I don't actually think mitigation block is in here. A mitigation block, though, is different. It's different. A mitigation block is slightly different than a regular order block. But depending on who uses the terminology, they might still be referring to the same thing, right? Not knowing that it's actually different from an order block. So it might actually be in the context of, what you're asking, it might actually be the same as an order block. Like the person that's using the word for, mitigation block, they might be using it thinking it's the same as an order block, but it's actually different. So depending on the context, it might be the same thing. Could you go a little into breaker blocks? Yeah, we can talk about that. Let me check out the YouTube chat though. I've been neglecting the questions in there. I think I still have V1 because I can't edit. Yeah. V1 is the only thing that people have access to right now. Make the indicator to show multiple time frames. I feel like if you can find the DOL, order block, fair value gap, all that. I'm sure you could also mark out the IFVG. Yeah, I mean, the thing is, like, I want the indicator to be very simple and basic. Like, I don't want it to be, something like Zonar, where Zonar is very elaborate and there's a lot going on, which is amazing. I think Zonar is a fantastic indicator. The whole point of the inverse fair value gap indicator was to keep it very, very simple, right? And so, although there's not like confluence across time frames, I don't really want to code it to have confluence across time frames because then it's going to not give setups that actually should be given. Like for example, the cells, if you think about it, the cells that we took from here, from the inversion, if we're in a bullish environment and the indicator was programmed to only look for confluence, it's only going to look for buys. It's not going to give you the cells here, but the cells were it was an absolute banger of a setup, you know? So it's like my understanding and your guys' understanding and confluence with the indicator is enough for it to just absolutely smack without it needing to have all the complexity of like identifying and showing other or taking into consideration other things, right? Other time frames, that kind of thing. Let's see. Question in the YouTube chat as well. What is a breaker block? Okay, so let's go over this. All right, what is a breaker block? And this will be the last thing I go over with you guys, and then we'll call it for today. Gold's not doing anything right now, so there's like we're not missing anything by going over this training. I do like this though. I still like this for a setup leaving the session today. So I'll drop this in the chat for you guys. One sec. This is something I would look for still if we get it. Gold outlook, boom. All right. So what is a breaker block? Yeah, let's go into what a breaker block is. I got a cheat sheet for you guys. So a breaker block looks like this. And before I even show the actual visual, let me break down the definition of it. Okay, so breaker block. Here we are on the Institutional Trading Dictionary. There's like a whole table of contents over here, by the way, so you can jump right to it. Breaker block. A breaker block is an order block that initially fails to hold price, but later acts as a strong support or resistance after a market structure shift. That'll make a lot more sense when I actually show it to you visually. It signals a change in market sentiment and can be used to identify potential entries aligned with the new trend direction. So visually, this will make a lot more sense, okay? This is a picture of a bearish breaker block, and I'll show you a bullish one after. So here we have a bullish environment, higher highs and higher lows. This is an order block, last down candle prior to the up move that created a new higher high. A breaker block is when you have an order block that's disrespected and traded through. It's kind of like an inverse fair value gap, but for order blocks. Okay. Fair value gaps, let's say this is a fair value gap right here. A lot of times you can look for bounces to continue in the trend direction. But an inversion is when price closes through and kind of disrespects a previous fair value gap. This is the same ideology with order blocks. All right. So here you have an order block that is failing to hold price to continue, going higher. So we see price break, then we return to that original order block and price rejects to go lower. It's almost like a break and retest. All right. And then a bullish environment, it would look like this. Okay. Where you have lower lows and lower highs. Here's your order block, last up candle prior to the down move, but instead of price trading back to it and rejecting to go lower, we trade through it. That old order block now becomes a breaker block, and you can see price return to that area for potential longs. Does that make sense? Twos in the chat if that makes sense. So the way you would take an entry off this is your entry would be off of the last up candle or two here. Your stop loss could be either beneath this low, or for a tighter stop loss, you can have it beneath the actual order block back here. But sometimes you'll get wicked out if that's the case. Because usually when there's a breaker block, there's also a new order block down here. So sometimes price will, trade into this area. And you might get stopped out if you have a tighter stop loss. What is CISD? CISD is change in state of delivery. It's very similar to a market structure shift. It can be likened to a market structure shift where here we're creating lower lows and lower highs. And then price goes and creates a higher high. That would be a change in state of delivery. Because now we're not delivering lower, we're delivering higher. And we're respecting, bullish order blocks and things of that nature. So that's what a change in state of delivery is. Are breaker blocks common? Yeah, I mean, you'll be able to identify breaker blocks quite a lot. They're not my preference. Like my preference is to trade order blocks. Order blocks are a little bit easier. Do we get change in state of delivery before a market structure shift? Yeah, sometimes you can get a change in state of delivery before a market structure shift. Like technically, you can almost look at a change in state of delivery as similar to like a change of character. So, for example, if we were in a bearish environment, creating lower lows and lower highs, and then we see something like this, like technically this would just be a change in character. This wouldn't be a change in state of delivery, but instead of, us trading to create a lower low, followed by a lower high, and then another lower low, we see price trade to create a higher low, followed by a higher high. So this is not technically a change in state of delivery. It's a change of character. The change in state of delivery would be the market structure shift above this high. So when price trades above this, that would be your change in state of delivery. That's the way I look at it. Some people might look at it the other way, where it's like, if we get a change in character, that is a change in state of delivery. It's kind of discretionary. It's to your own discretion a little bit. What time frame is breaker blocks best used? I mean, it's just like anything else, right? You can identify order blocks on any time frame, fair value gaps on any time frame. So breaker block, it's the same thing. Like if we were to get candle closure, beneath this area, this would be a breaker block right here. Right? You have last two down candles prior to this up move. But if price ends up disrespecting this, and I do think we will disrespect this at some point, this would be a breaker block you could look for sells off of. And it's also, a breaker block is also always going to be the start of an order block. This is like a big order block right here, right? But we can identify breaker blocks on like any time frame. This was a breaker block right here. Last two down candles prior to this up move. But instead of price respecting it, we trade beneath it. What does price do? Return to it right here. It's pretty textbook setup, actually. This would have been a good sell this morning before NFP. Notice how price returns to that area. Continues lower. It's doing two things. It's returning to the breaker block and the order block. Making a triangle pattern. Yeah, you could look at this as almost like a triangle for sure. For sure. Cool guys. Awesome. Well, I think I'm gonna wrap up the session here. No trades today. Hopefully you got some value from the trainings. And yeah, this recording, I'll post it in Primeverse. It'll also be up on my YouTube channel. So for those of you that aren't already on my YouTube, this is also where we're going to be doing the live CPI session on Friday. So you can tap in with me on Friday from YouTube. You'll see that it's scheduled. We go to live, so you're going to see live CPI analysis and trading 7:30 a.m. on Friday. And it's also in Primeverse now, I believe, as well. If you go to the live sessions tab, you'll notice that live CPI trading is in here. So it looks like there's 80 of you that are going to be going to that so far. So you can feel free to go in there and RSVP. But yeah, man, that's pretty much it. I'll drop the reduced in size training for how to use the inverse fair value gap indicator once I do the edits later today. And then yeah, this whole training and recording will be up on my YouTube channel. So feel free to watch it back. And very insightful. Will definitely be use your tips moving forward. Awesome, man. Glad that it resonated for sure. This will be rewatchable. Yes, Nathan. Yeah. Just make sure you're on my YouTube channel and you'll see the recording. It'll be under the live tab. You'll be able to watch this full live replay on YouTube. And then I'll upload the inverse fair value gap, how to use it training under the videos section of my YouTube channel. Any date for the updated IFVG? It'll be soon, probably like this week. Hopefully by Friday. That would be good. Friday would be good. Maybe sooner. It's going to be dependent on when we can do an email blast for everybody in Primeverse so that everybody has the info and yeah, anybody that was a part of the V1 indicator beta, you'll have access to V2 by default. So I have to add like 800 people or something to V2. It's going to be a little bit time consuming to do it, but should be able to do it no problem over like a couple hours. Just go through and literally add everybody to V2 that was on V1. But yeah, man. So we'll be back on Friday. Have an amazing rest of the trading day, guys. Stay tuned in the PV Trade Insights chat and look out for any ideas that are shared in there throughout the rest of today. When is PrimeSync going to release? I wish I knew. I would tell you right now, but it's soon. That's all I can say because I actually don't know. So hopefully very soon, but soon we can for sure say soon. But yeah, fam, much love. Have an amazing rest of the week. See you guys on Friday.